Hello dear traders, welcome back. Wednesday morning. We wanted to start the day talking about the crude oil. Last time we were here was about a week ago, and you probably remember that we decided to get right back into a bullish position as we noticed that price came back and crossed back above this blue dotted line, which is our main point of reference with, well, it was up until yesterday. Now, today, our main point of reference is actually the 200-day moving average, but I'm going to come back and talk about the 200-day moving average in a minute. Just going to dial back a little bit, just to remind you guys, when we noticed that price had crossed back above that blue dotted line, by the way, it's at 53.10. I just want to remind you where this key level is coming from. So you probably remember that head and shoulders pattern that we started to notice probably around 10 days ago, probably maybe even 2 weeks ago. We noticed that right shoulder was starting to form, and then boom, price broke below that neckline, right? So we got out. We had a bullish position at that point, and we stayed on the sideline for a few days, and then we noticed the comeback. But what was even more important was the fact that this comeback, right, actually represented what seemed to be the noisy part of that downside move. And we could the reason we figured that out was because we were able to filter out that move looking at the weekly chart, and here we could easily spot that huge shadow, right, that spike that have been bouncing back up and closing above that 53.10, and of course later on came the upside reversal. So yeah, guys, after that event, we decided to come back in. We pulled the trigger, and we're still here, guys. All right, we're still in this position. What we had here was a technical correction, what we call a local technical correction, a few days ago. It lasted for 2 days, and price came back on the upside. But here we are now, right about to break the 200-day moving average again. After yesterday, you can see here yesterday was the first attempt, the first real attempt to break through. It actually failed, and price ended up closing right below. We don't know how today is going to end, but now we can definitely see that price is trying to challenge that 200-day moving average again. If it's going to be successful by the end of the day, I think that's going to be a good sign that we are pushing forward, right? That we're pushing forward, and in that case, we would like to talk about the potential targets, right? The first one, 60.75. Guys, this one is a 1.236 first Fibonacci projection, of course. First Fibonacci projection measurement of the previous opposite move. And I've just marked that move from the very top to the very bottom. And then, of course, we can talk about final destination. It's 64, almost 64, 63.93. So there's a long way to go, potentially speaking. All right. We should also mention stop loss level, which was significantly adjusted all the way to 53.5. It's pretty tight right now. And here's the deal. All right. If we're not going to break above the 200-day moving average, that's going to be our main test level at this point. Then we're going to split. All right. We're going to close this position and look for opportunities somewhere else. So it should be really interesting to follow up on this one. That's what we'll do. So that's about that for the crude oil, guys. We'll see you in the next video. Take care.